This is Dr. Jeffrey Scott, and this is part two of my weekend market update. Is this a new bull market? Is this a bear market rally? Growth appears to be back, or is it just a big bull trap? Recording this on the 4th, but it's for the weekend of 3/5/2023. Because of a technical issue, I am breaking out the original presentation, which are static charts and slides, to give you my assessment of the market and what I'm doing from a macro money management perspective. I'm breaking that and separating it from in the chart section. This was because of a technical problem, but the more I think about it, it might make sense going forward. If you want to make remarks, should I divide them up into the two parts or should I keep them combined? Please let me know. For those that don't like the first part, it gives you the ability just to skip it. The disclaimer, it's for educational purposes only. Anything I recommend should be considered in the spirit of education, not investment advice. I am a doctor, not a broker. The tools I use I paid for, and trading involves risk, and you are solely responsible for any investment decisions you make. I post these on stocksanddocs.com, and if you haven't been there, it's free. I post them whenever I can during the week. On YouTube, if you're seeing this here, I only do this on the weekends. So if you want to get more insight into how I'm trading this market, I welcome you to come to my site, fill out the little stuff here. I don't even get the list. It stays with the web managers at becomeabettertrader.com. But they can send out emails when I post something. It won't be every day, but it's frequent. All right. So I like to start with a 5-minute chart here in Wealth Charts just because it kind of gives me insight. Now, if you want to know where one day ends and the next day begins, look at the volume. Here is the 24th. Okay. Here is the end of the 27th. So this is the beginning of the 27th. So you got the 27th, the 28th started here, ended in the first. First ended here, and you got the second starting here, and you got over here, you got the second ended going into the third. So first thing that I see is the market started Monday with a gap up and sold off. On Tuesday, the markets really didn't do much at the open, and then had a little bit of rise into the close. On Wednesday, the markets just sold off all day long, which really, to me, set a bad tone for where the week was going to go. Thursday, we saw a gap down, and then, boy, did the markets run. Traded up, took out the 50, went sideways, and this may be when that Fed person spoke, but the markets just took off. And they didn't look back, in fact, gapping up again into Friday and getting people talking about a new bull market. Market ended obviously at the high of the week. It was a great week to be long. Now the question is, do we keep going? So just for a little bit of geography, this was the high in January 3rd, January 4th of 2022. This is a trend line that everybody has on their charts because it's so obvious. We had tried breakout here but didn't close above it, and we finally broke out in January when we had our run up. Now we had a wedge, and the question was this going to sell off or was it going to hold? It broke down to this ascending trend line, broke through, and then we talked about during the week that we had the 50, the 200, and this trend line below it. And the spiders held, had a big Thursday and Friday move, took out resistance, and actually looks like the MACD is leading towards going into a bullish formation. So if you want to be long the markets, I think this is a very supportive chart. What about the Qs? Same theme, same trend lines, broke out on the 50, took off on Friday after a big reversal on Thursday. Now there is something missing here, and what's missing is volume. But the markets look pretty constructive right here. Now I drew this Darvis box in. It's probably too early, but the point was we pulled right back into this resistance here. The Dow broke out above the trend line first. It's been going sideways, and it reversed on the bottom, sort of a double bottom here, and right above the 200. So again, when obvious things happens, that's pretty good. So it did this where you thought it would do that. And then we look at the Russell, similar story, pull back almost to the 50 and reversed. So the major indices have all reversed at support, and they all feel like, to me, that they want to go higher. So I am expecting this market to continue, pending my next data point, which could happen before the markets open on Monday, for all we know. But right now, as I go into this report, I'm feeling short-term bullish. Um, this could be the start of another bear market rally. It could be continuation of the one that started in January. It could be a new bull, or it could be a trap in reverse. I don't know the future. Right now, my bet is we've got a little ways to go. The VIX here, look at the VXX, doing nothing. And then what's got to make you happy is that the dollar seems to have met some resistance below the 200, had dropped a few days, and it's going to be interesting to see if this line here, which to me was a line in the sand, can be pierced and go back down, or will that be support? Weak dollar, that means gold and silver are humming again, um, both off their highs, but they look strong. Oil had a good end of the week, was up 2.28, and the big mover on the week is natural gas. I'm actually playing that with Boyle. Now, if you were in my stocks and docs world several days ago, and that would be, looks like the 22nd, I pointed out that natural gas was too cheap compared to oil. And a few people asked me, how do I know that? Well, I remember I used to watch on CNBC, and they would talk about the ratio of the oil futures to natural gas futures. So what I did, I said, let's just plot a chart of ratio chart of natural gas versus oil. And let's go back a long time. So we've gone back here to about 10 years in the market of data. See how much, if I can get any more. That's about all I'm going to get. And maybe 5 years. And you could see that at a difference of 9 to 1, oil to natural gas was much above the typical high, which is 4. So either oil had to come down a lot, or natural gas was going to increase. And natural gas has come up nicely. The other optimistic thing from these days' charts is that the 10-year fell for a change on Friday. It was actually fell quite a bit. It looks like it was down 2.5, 2.6%. This here was a site of a double top and prior support. I thought this was an important line. We'll see if we can drop back below it. Weekly market timing. The Spider, the Qs, and the Russell are in buy territory with the price closing above the 30-week WMA and the weekly bond go green. The Dow got back above on price, so it's more neutral. Remember, this is the one going sideways. The weekly bond goes red. Now, I bet it converts next week if the market's positive. Right now, 3 are longs and 1 is mixed. It supports my bullish tone. When I look at the S&P 500 sectors to see where's their interest, materials remain strong. I was impressed with how industrials came up this week, but I'm really impressed that technology is holding, although discretionary, which was coming with it, did not act well this week. And you can see the defensive staples, real estate, utilities, and healthcare are not doing well. So the defensive stocks are doing poorly. Technology is leading. Materials are up, probably dollar, and multiple reasons. I think that kind of gives me a sense of what's working, and being a little bit more aggressive makes sense when the staples are that weak. If I go into my bull scanners, we'll start with a heat map of the S&P 500. Pretty green day. I mean, best day I've had in ages. When I look at percentage return, I hope you had a great day on Friday as well. But it's hard to find things that were down. And even though there's red here for Salesforce.com, it was down 0.1% after a big gap up on earnings. If I looked at Wealth Scanner to get a sense of what's working, a couple things to point out that are changes. It's going to come up momentarily. The first thing is, if you look at early in the week, we had 400s as the maximum score. So things like industrials, aerospace, materials, energy have moved into the 6s and 7s. That's a big improvement. The dollar has come down, and TBT, which is leading, is gone. I don't normally look. TBT goes up when the market's bad. I don't normally look below the 3-400s, but I do notice the increased 6 and 700s. So now you're sitting here. If you're like me, you're bullish. Technology and materials are a place to start. How do you find stocks that are in position potentially to take some trades? So what I do to prepare for this is first I've got a number of watch lists. Some of the watch lists are static, and then some of them I created just for my weekend review and for my own personal work. And I like to scan those watch lists to look for stocks that are going to meet my criteria. So let's just look at ITA, and I'm going to use this as an example of what I am looking for. ITA is an aerospace ETF. I don't own it, but it's a pattern that I want to see. So what I look for are stocks that are in an uptrend. Now this is kind of a flat uptrend, but it's an uptrend. I mean, we got higher highs and we got higher lows. Higher highs and higher lows. All right, so certainly off of the January 19th low, we're in an uptrend. So that's the first thing I want. Now I can scan for an uptrend by looking at the weekly bongo, which is this middle green line here, which is my trending indicator that some friends and I developed over a decade ago. So when that middle term bongo is green, I know I'm in a intermediate term uptrend. The fact that the monthly bongo is also green tells me I'm in a longer term uptrend. Now I don't want to buy stocks that have moved so much I can't buy them because they're extended. I want to find stocks that are in an uptrend that just had a short-term pullback, and then I can buy them as they're starting to emerge from that pullback. So that daily bongo turning red is going to identify for me a stock that's in a short-term pullback, and when it flips to green, then I want to find that on my scan because I know that there's a short-term pullback in the setting of a longer-term uptrend and then a reversal. These dots here that you see going back, there's 4 dots. I'll show you something with 4 dots. You don't see a lot of 4 dots because that requires a specific type of a gap. But these dots are what I call impulse indicators. I've been using impulse indicators for 20 plus years. Do I buy a stock because they have more impulse indicators? Not necessarily. I look at a stock because of the impulse indicators. So don't overread them. The top one, which you don't see, is a gap. The next one down is volume. The third one down is breakout. And the fourth one down is momentum. The next one, the yellow, is a squeeze. And it's one thing to scan for stocks in a squeeze. And John Carter certainly popularized the idea that when stocks emerge from a squeeze, they have big moves. So why don't we tell you which ones are emerging from a squeeze? So I can actually plot yellow going to green, and green is when they come out of the squeeze, so I can scan for that. And then I like to add to that things like relative strength versus the spider, or break above its moving average, OBV versus a 10-period exponential as well. And then, the ultimate thing for me to find is a stock that is pulled back in an uptrend that breaks out. So the breakout says it's taken out multiple recent highs and closes on great volume, momentum a new switch on the daily and a long-term up, and strong relative strength and volume. So this is exactly what I'm trying to scan for. Okay. Now, if you own wealth charts, my dots are included free. You can get a one time frame bongo for free, but you want to have a weekly bongo, you set up two charts and you put the daily on the daily chart and you put a single time frame on a weekly chart, and that's going to be the weekly bongo. So let's start with a CAT scanner and let's just look at material stocks. I think I have materials, but we're going to find out. Okay. My scanner is set up, so I only like stocks 5 and 500,000. You got to put what you want. I'm bullish, so I want at least one bullish dot. I don't want any bearish dots. And then I want within the last 2 weeks, and let's maybe cut this 9, we'll cut it down to 6. Within the last 6 bars, I'd like to have a reversal on the daily bongo, and I want the current bongo to be bullish daily and weekly, which means that reversal had to be bearish to bullish. I'm going to hit apply, and then I'm going to run it against materials. I'm going to rank them by the number of dots. And let me just format this a little bit easier so you can see it all. There we go. All right, that gets what I want to show you. So what came to the top is ECVT. I have no idea what this company is or what they do, but I'm a technical guy. So I have a stock that has been in a weekly bongo here since October 17th. That tells me it's in a long-term uptrend. It had a pullback here on the daily, in fact, coming down and holding support at the 200 and closing on the 50. And then on Friday, it had a massive volume day with a breakout, volume, breakout, momentum. The daily bongo switched to green. Look at relative strength and look at volume. That's exactly the type of stock that I like to look at. And so this I would put onto my watch list. So I might go in here, change my default watch list to my buys. May have already been to my buys, and then everything I check here I can add to it. Southern Copper. Now, if the dollar weakens and we're not going into a recession, then copper might be great, and copper goes up with a strong economy. FCX is one of the main copper plays, but here's Southern Copper. Well, look at this. Is this in a long-term uptrend? You tell me. Absolutely yes. Has it pulled back to support? Absolutely yes. And then you flip the bongo. It's in a squeeze. It's got the volume, breakout, and momentum. Strong relative strength in OBV. Just took off above the 17. Not extended by my high jump. I like SCCO. Okay. Let's take a look at ASTL. Must be a small steel company. Now, steel looks great right now. If I was going to buy steel or add to steel, I'd probably not look at a third-tier steel company. I might look at a specialty steel company. Big run, getting extended, but this is Allegheny Technology Inc., ATI. I guess they call it ATI now. This is where you wanted to buy it. Now look below on that line. Notice you've got 2 days in a row where you had 3 dots. You had coming out of the daily bongo on that candle, the first one. The second one was totally clean. And you had relative strength and OBV going up. This is telling me that, this thing potentially has given me another chance to buy, but it's extended. I could look at X, US Steel. US Steel has had a big run. Now it looks like it's getting extended on the daily. In short term, it probably is. But when you look at the weekly, you see it's not extended. These are almost becoming value plays. I like ATI more. Let me put that here. Um, Anything else here that I remember? AXTA, Axalta Coatings. What a beautiful pattern. Nice uptrend, recent reversal, and now it's got some dots. I'm probably not going to go after this one. I don't think it's as good as the others. Here's a cheap cement stock. Um, Again, I don't know if today's the day, but this would have been a great day to find it, which would have been back on Wednesday. And why? Look at the massive volume, the three dots, the relative strength, and the OBV going up and breaking out to recent highs. Um, I might put that one down on my list. And then I'm going to add the ones we just found to my watch list, to Scott Weekly Buy watch list. The other thing that I liked was technology. So let's go look at technology. Same way to do it. Let's just rank them by the dots. And tell me you don't love AVGO here. Might have loved it better over here before it gapped up on earnings. There's your fourth dots, a big gap up on volume, breakout momentum, strong relative strength at OBV. I like this. ESTC had earnings come out. It failed at the 200. I'd like to see it break out before I got there. How about Apple? Huh. Apple has broken above the 200. It had three dots. Relative strength and OBV are looking interesting. I don't know about Apple, but I've got to want to watch it, I think. How about ALIT? Alight. Cheap stock. I like the relative strength, the volume, the three dots coming out of a squeeze. Now, DocuSign looked interesting, but DocuSign has earnings this week. Earnings are maybe Friday. Let's see if it shows. I guess that would be Thursday. And I don't like entering a position before earnings unless I've got some really good insight. Okta, another one I like a lot. Again, I liked it even more on Thursday when it had a strong close with a four dot move, strong relative strength in OBV. It's not extended. It's really coming off of a big sell-off. I like Okta as well. So let's just hit add to watch list. So now that's kind of a top-down approach. Made my thoughts on the market. Then I looked at some of the leading industry groups and sectors, and in this case sectors, and I found some interesting stocks. Bottoms up, take a look at all stocks, and let's run them against my CAT scanner. Now, I do have the filter with 5 and 500,000. AI, C3AI, had great earnings, said they're going to turn profitable. This is one that a lot of people like, including myself. Four dots, massive volume, relative strength in OBV. You know, a lot of people, myself included, worry that this is just about hype, but I listened to their earnings report, and when you start talking about being cash flow positive, and they have real customers paying bills, I think that looks interesting. The next couple we've looked at, EWJ is a Japan ETF. I'm probably not going to buy a country ETF, but nice uptrend pullback and a breakout, four dots on volume. There's Apple. Here's a stock that I never understand the valuation, and it gets crazy. Align Technology, the Invisalign orthodontic work. But if this is a name you like, it had a gap up here, I believe, on good earnings, drifted down, but it's breaking out here with breakout on volume and momentum. See, the volume is strong there, relative strength and OBV turning up. That looks interesting to me. Here's another way of playing artificial intelligence. This is bots, which is global robotics and AI. Big volume, breakout, momentum, relative strength at OBV. That one looked interesting to me as well. You know, You notice I haven't looked at one stock that doesn't fit my criteria, nor have I looked at one stock that we didn't like, except perhaps it was too cheap or I could find something better in that group. Um, so I just love this as a way of finding new stocks to be interested in. So let's add these to my watch list. And then I want to look at a list that I generate out of MarketSmith. And that list is called the high relative strength. So I just call it the Jeffries JAS Weekly High Relative Strength Leaders. So now I'm looking at some stocks that have already had big runs. They may not be in buy points. The list itself is about 30 stocks. These are the ones giving an impulse indicator that I might want to look at to see if there's anything setting up for a buy. ALGM, Allegro Microsystems, one that I currently own, has had a nice run, had a good buy signal in here, ran up, pulled back. Again, there's my pullback on the bongo, ready to run. ATI, we already know we like that. We looked at it. Rambus is a semiconductor stock, an old name. Setting up, I don't see that much excitement yet. United Airlines, kind of at a double top, so I'd be careful there. And then Weatherford, which has been just a huge leader on the oil services side, a young thing. If I go to my watch list, you could see the rest of these high relative strength leaders, although I'm not going to scan them right now. Oh, I know it's down here. JAS, JAS. Do I remember my alphabet? Yes. And these are some of the stocks that I pulled up. If you look at them for year-to-date performance, Arco's down. But if you so you got Arco and Catalyst Pharma. And here's the Catalyst stock. Catalyst problem was it was a big leader, and then somebody came out and said they're making it generic, but it's not to like 2034, so it's silly that it sold off. But if we look at year-to-date change, AEHR is one of my favorite leaders. Um, Whipsawed here because there was some talk about, I think, ON Semiconductor is like the massive part of their business. What happens if they lose it? But you could see these high relative strength stocks are high relative strengths because they're doing very well. And I like to scan that list every day to see if anything gives me new buy signals. On that note, I'm going to thank you for your time. Let me know if you like the idea of me separating out the um, the two videos, one for the presentation and one for in the charts, or if you like the other format where it's single. And have a great week. Remember, this is not for investment advice. It's purely education.